Let's get more on the reaction on the numbers from Rich Greenfield of LightShed Partners. He joins us now on the fast line. Rich, your take on this decline of 20% after hours?
I mean, look, investors are clearly basically saying the growth story at Netflix is over. Like, they're basically just throwing in the towel and saying growth is over. The TAM, the total addressable market, meaning how many subscribers can Netflix have? The belief was they can have 600, 800 million, maybe even long-term a billion subscribers. They're at, 220 million today. Investors are panicking now that the growth, the potential market growth, is substantially less. I don't think that's true, but that's what the guidance is making people fear. Remember, the guidance of 2.5 million, when you add it to the 8+ million they did in Q4, they're doing 10 million in those 2 quarters. So they're on a run rate for 20 million subs. But given what that Q1 guide is, nobody's thinking about it that way. Everyone's just looking at it going, this thing is heading towards 10 or 12 million subscribers for the year, and they're completely panicking before they're even thinking about what is the long-term potential market size for Netflix. And that's why they're also punishing every other stock in the group, because they're saying the streaming wars are over.
Right. So when you think about the total addressable market, which Karen was thinking about, should we think that that pie is not growing as fast? And so there are more players trying to eat a piece of this not as quickly growing pie? I mean, how do we think about it at this point?
I mean, the reality is Netflix just put up one of their best quarters in the U.S. in quite a while in terms of subscriber growth, and that's their most penetrated market. So, if you think about in Asia, where they have, 30 million plus subscribers, there's probably 200 million subscribers available outside of China in Asia, maybe even 300 million when you include mobile. There's just massive long-term growth potential. I think the question is, and the question management needs to explain to us tonight, is they're ramping content spend, but subscriber growth appears to be slowing. That doesn't make a lot of sense unless they believe subscriber growth is going to reaccelerate. And I think it was Dan mentioned, or Karen, I think there's a good chance that their expectations they're just conservative, and it's been very hard for them to model their business or predict their business over the last 18 months. But they're not acting like there's a fundamental change in the total addressable market, because if they did, they'd be slowing their content spend, and there doesn't appear to be any signs of that anywhere in the world. They seem more bullish on the global potential, not less bullish.
So we were talking, and just quickly, Rich, we were talking about the sell-off and some of the other related names in the after-hour session. Which declines are warranted, and which declines do you say to clients, you know what, you want to go buy this dip?
Look, the obvious one is Disney, right? Because Disney is the one who basically has taken the Netflix playbook and basically run it and done it incredibly well. But as you can tell with Disney stock over the last, call it over the last 6 months, fear has continued to build about their streaming business and how many subs can they have, how much content do they have to spend on. And, now you're starting to see that people are starting to worry that, hey, if Netflix can't get the growth with this amount of spending, what does Disney have to do with far less content? Like, just how much is Disney going to struggle to add subs? Again, not so much in calendar Q4, but as you get into 22 and 23, and can Disney live up to the expectations it set with the market for 2024 and beyond? That's why Disney's selling off. That's why people are going to be worried about the implications of this Netflix news across the whole sector. This is Viacom. This is going to hurt Viacom. This is going to hurt Warner Media, AT&T, Discovery. This is going to hurt everybody.
All right. Rich, great for you to phone in. We appreciate it. Rich Greenfield.
Thank you.
LightShed. Dan Nathan, what do you think?
Well, here's the thing, Mel. We like to talk about long-storied rumors in the markets about M&A every once in a while. You remember that it was just kind of widely thought that Apple should have bought these guys years ago? Well, we just saw Microsoft make a $70 billion deal, right, for Activision, paid cash. Why wouldn't Apple at this point, the largest equity on the planet, north of $2.5 trillion, this thing is going to be sub $200 billion market cap. I just think that that's going to be a question that starts to happen. If they miss this Q1 guidance, the stock's going to be lower. It's going to have a 3 handle on it in the not so distant future. And M&A could be in the sights here because they've already told us that they want to get into gaming. This company's going to have to be a platform, in my opinion. And they're going to have to maybe, if they're not an acquiree, they're going to have to acquire maybe a Spotify or something, throw some music subscription in there, gaming subscriptions. It's going to have to be more things to more people if they can't grow on just the video.
Right, and that's what we're going to be listening for on that video call. We're going to be listening to their gaming efforts, in particular, some of their off-platform efforts. Just quickly, Tim, on Disney, we're down 3.8% at this point on the back of Netflix earnings. What do you think of that move?
Look, as a Disney shareholder, part of that excitement over the last 18 months has been, of course, around streaming and in fact, getting a Netflix-like multiple. Well, guess what? Disney's streaming business has got a Netflix streaming multiple. And in fact, it's actually more expensive. Maybe not after today. Well, let's see. Obviously, Netflix is a lot cheaper. But I think the story here really is about margin and compression. And let's see. But if you don't have the subs and you have this competitive landscape, do they have the pricing power? And that's really the question. Yesterday, everybody thought they did. We'll see.